My name is Lior Zuri. I'm a corporate securities partner here at Nixon Peabody and leading the emerging companies practice. We also have a fairly robust blockchain practice. One of our lead folks from our blockchain practice is here, Brooke First, and he came all the way from New York, which shows our commitment to the blockchain and the crypto world. I personally have done the token sales for Civic and Propi, and we've got a number of folks out on the East Coast, particularly New York, who are very focused on what's going on with the SEC as it relates to the industry. With that, again, we are very honored to be part of Gumi's launch party, and we're delighted to be supporters of CryptoMondays, and I forget which one this is, but it's been a few. Third, Brooke? Again, thankful that you all came, so back to you. Thank you.
First question will actually be to Hisham. So you started the blockchain investing practice at Rising Tide, and so I wanted to ask you kind of what was that experience like, what were the arguments you had to make, and what were the challenges?
For sure, thank you, and thanks for the introduction. It was difficult, in short, but we made it happen. The firm invests in enterprise-type models, business-to-business type companies, enterprise software, a lot of personalized medicine type initiatives. And so when I came in as an intern 3.5 years ago, telling them that this is a space they should be investing in, they kind of dismissed it. And over time, I started developing my network in the space and speaking with people and learning, honestly, from the entrepreneurs who were on the fringes, actually leading these initiatives. And slowly but surely started gaining conviction internally. One of the biggest challenges was the legal infrastructure, which, funny enough, we're at Nixon Peabody's office. There was we had a very hard time kind of wrapping our heads around, okay, how does the bad case scenario look like? Because everyone, think mid-2017, everyone's talking about the upside, everyone's excited, bubbly to say the least, and no one's talking about the downside scenario. And the founding partner of Rising Tide, he's been a VC for 35 years, and he spends a lot of his time with companies that aren't doing well to make sure they get a decent exit, to make sure that the employees get a good deal and that they're not left to be alone. So we found a hard time kind of understanding if this company doesn't go well and we own a token, how is that token tied to the LLC that we're actually invested in? Do we have access to any sort of rights over the IP that can be sold to a potential acquirer? If they were acquired for their employees, are we going to see any of that? So it took me a while to see what type of questions I should be asking, and it's led us to the current thesis that we have, which is very picks and shovels oriented. But custody is another type of issue. Evercoin, you're in the money. This is something that's definitely needed by everyone and by retail investors, especially.
Excellent. Yeah, I know governance definitely has come up in a lot of panels that we've had. And so I do want to talk about regulation in this space. So a question that I'm going to pose to Ray is, when you're looking at blockchain startups and blockchain investments, where do you lean more towards kind of playing nice and involving the regulators, or going kind of with the Uber model of go and apologize later? And how do you manage that risk?
Okay. That's a pretty tough question. So ideally, I would recommend most of our public companies we invested to work nicely with the regulators. Either you follow what they are requesting, or you work around it. Means, for example, if if the U.S. have a pretty restricted regulation on a specific area, for example, token offering, then you probably should targeting the other markets. But it's all depends on the project itself. First, whether it's meaningful for you to have something that potentially anti the regulators. Is that really a core part of your project? Whether that part will really fundamentally change anything? If that's because of that, you are providing a fundamental, benefit changing to the major audience. You should do it. And when the regulator realize what you're doing is correct, it actually benefited to most of the users, most of the individuals, then they will adopt it, because most of the regulators, from what I understand, no matter it's US or Japan or China, what they're trying to do is protect the users, the individuals especially, and what they want to do is see the technologies being adopted to improve the any use cases. So that would be my answer to that.
Point was that it is possible to make a successful company, to make a successful fundraise, and just because blockchain and crypto is the new kind of flavor right now, doesn't mean that these regulations should be ignored. It does mean that they should be more clear, and there should be certain precedences set in terms of what happens if you ignore them, or how do you follow them correctly. And I think Telegram has been kind of the poster child of that now. But what I encourage companies that come to me for funding or for advice is please be compliant with the laws of the company where you're doing fundraising. And most of the time, the U.S. is one of the most important ones. So.
Yeah, it has me thinking, like, if traffic laws didn't change in 85 years, how would the streets look? Like, things have to adapt. And I think innovation will always lead regulation. Yeah. But Silicon Valley has a tendency to say, like, move fast and break things. Mm-hmm. The SEC doesn't like to move fast and break things. They like to take their time, understand something, and I think, like, a couple of years ago, I wasn't so bullish on the US adopting blockchain technology based on what I've seen in the market. Reactions of portfolio companies, interactions with the SEC and other regulators, the water was tainted. But today, I think the sort of input that the SEC is putting out, and I see like a big move by them to request experts from the industry to opine and say, how do you think this should be regulated? I think that's a big move by the SEC. And it's getting a lot of, for one, portfolio companies, but also many people in the space involved and chiming in, because it's a new, in my opinion, general purpose technology. And it's going to take a while to figure out the nuances of how it's implemented. But we're definitely seeing finance be the first part of it, and finance needs to be regulated.
Can I add one more thing?
Sure.
Yeah, I think the discussion shouldn't mix the technology with the fundraising part. Actually, if you look at most of the regulators' argument is regarding how you issue the tokens, how you issue your shares to, especially the individuals, because that's the parts that including SEC or any other government is trying to protect, because the individuals, just like back to 2017, there's a lot of individuals bought tokens. They didn't even know what it is, and they bought it because the market is growing, and a lot of scam project got the money from the individuals, and those are the people who's been actually negatively affected, and the government actually protect those parties, and the government never say the technology is bad or you cannot do this. So I think what you should do is, if you believe in the technology, you believe in your product, just do it. And if you can find a market demand of your product, you should do it. And how to fund it, you can either go to us, as a venture capital investor, that's our job. We support you. We give you the initial funds to do it. Whether it's in token format or in equity, we can discuss later. It depends on this model, but making the regulator happy doesn't really affect your project. That's my comment.
That's true. I agree.
And so I have a kind of a corollary question to this. So how do you value companies that have an as yet undefined market size? And this could be for any of the three of you.
You value it?
Sure.
I'll start it. So it is not really a valuing the company. So the way normally a venture capitalist will think about a early stage investment, because they don't have revenue, they don't have profit, they don't even have product yet. So if you say making a valuation using the so-called DCF or market multiple, that's all not applicable to the company you are investing. So usually what you do is first you have to, the reason you invest in it because you believe in the future of this business. They will be able to target a mass market. There's a huge demand, potentially huge demand on their product. So eventually when the product is launched, the users starting to adopt it, they should have a potential to become a unicorn. That's how VCs look at it. And then when you decided if this is a good technology, the good team working on the good concept, then when you decide the valuation, usually you think about what's their how much it costs that they will need to spend in order to get to let's say shipping the product. Then if you need X amount, and you think about when from here until you, let's say, be able to be acquired or go IPO, you will need to do another 3, let's say 4 rounds. And then how much evaluation, how much shares you want to dilute it right now, because if you dilute too much, you won't be able to raise money in the later round. But if you dilute it too little, that means you cannot get enough money. So in order to get the money you need and not dilute too much, let's say 10 to 20% of your for the seed round money, then you calculate opposite side. You calculate, this is the value you have to make it in order to dilute 20% in order to get money. So that's the way how we do it.
Well, we just back into it. I want to invest $1 million. I want to own 20%. So you must be valued 5. It's kind of a joke, but we had a conversation recently that said every company that came through, for angel fund, was valued at $4 million. He said, well, last year they were all valued at $5 million, so we're kind of moving in the right direction. I mean, the reason I'm saying these kind of funny things is at our stage, the angel investing, when we see the companies, it is very hard to do this. So what we look at external factors, we look at the teams, we look at the market potential, competitors, and we kind of assign values to each one, mentally, and then we see what kind of offer we want to give to them and what we can do with the companies. What's important is for us, we want to invest in the top 3 companies in that industry. We don't want to invest in somebody who's going to come in 10th. We want to invest in somebody who's going to come in 3rd. And there are many factors to consider that. And when you're an early stage investor, it's very hard to do that. And that's why we diversify. So valuation, subjective.
I'd say for us, we approach investing in blockchain pretty similar to how we approach investing in other areas. It just adds a couple of layers of complication. One is crypto-economic analysis, the other is legal infrastructure analysis, and then obviously more industry-specific checks. But the basis of it is, especially at an early stage, and we primarily invest at the seed stages, it's more of an art than a science.
Meaning as one of the potential mass adoption of blockchain, of cryptos, is a good way to think about it, because in the current game, there's already a virtual economy inside of it. People already feel comfortable to spend money to buy some virtual things. And there's already buy and trade of virtual items within the game. So now the question is how you open that closed economy to become a open economy, and using the blockchain features like proof of scarcity, true ownership, to build some brand new experiences, gamification experiences that the users the gamers can enjoy it. A lot of current blockchain gaming studios, basically what they're doing is just copy what CryptoKitty is doing. You issue the assets that they're telling you that you truly own it. But think about it, without a really game, owning a virtual item doesn't mean anything. The only thing I can do with it is selling it later. Then you're losing a whole the gaming economy behind the game. The gaming economy should be you giving gamers a chance to having fun, enjoy themselves, so that they would like to spend money in the game. That's how the gaming economy works. Now a lot of people say, oh, you don't need to spend money in the game anymore. You play to earn. That's a good concept. But if everybody, hopefully they want to play to earn, then who gonna pay the money? You need to make it a circle, closed. So you have to build the gaming system, make the gamers having fun, having really good experiences in that game, so that they would like to spend money to buy items. They want to trade items with others in order to keep playing the game. They should build the social factors inside the game. So there are a lot of things that you should build into the game that not yet happen. I think there's a huge potential. The market is huge. There's huge potential you can add.
So this is going to be the final question for the panel. So I'm going to ask you each to make one crazy prediction for Blockchain Week 2020. So what are we all going to be talking about 1 year from now?
This is not investment advice. Get me in trouble. I'm gonna steal this one from Andreas Antonopoulos. He's a decent predictor. His most recent thesis, which I got the chance to see 3 days ago at the Blockstack Annual Summit. This may not be 2020, but basically multi-chain one network is basically the future that he predicts. And I can definitely see that. So if that future were to start materializing in the near future, then I'd guess that the topic would be chain interoperability, and like actionable chain interoperability.
Maybe this is more of a hope, I guess. We will see some really good blockchain companies IPOing next year on a legitimate US exchange with SEC approvals.
I hope so too.
Yeah, hope.
Well, it's I would say I don't have the capability to predict the market. What I want to say is next year I expect there will be more conversations regarding how to utilize the blockchain in a real business use case, rather than when you're talking about the so-called decentralization. I think in the past several years, most of the core community people mainly talking about the technology, talking about disrupt the traditional big enterprises. But I think now people are realizing without if you only talking with the people who are already in the circle, the market is too small. If you really want to see the blockchain, the crypto world to grow, you have to bring new people into this world. Then you are facing is the enterprises, the corporations. Those are have a huge user base, have a strong business demand already. So what you should talk about is how to utilize blockchain technology using crypto to replace part of them, their business process, in order to make them feel even better, make them improve better. So I think next year there will be more and more cases. You're talking with people who say, oh, everything from this industry, let's say supply chain, banking, freight, and we actually utilizing blockchain to solving this problem. This will help us saving this much cost, increase this much revenue. I think that would be a really thing to see.
I think actually, Miko said this to me a little bit ago. When you look at a company and they're addressing a certain problem or a certain market, and let's say we agree it needs to be addressed, and maybe that's even the correct approach and the correct team. When the music stops, how do we know that this is the one that's going to have the chair? And when we look at it from our seed investor perspective, we want, like I said before, we want to be in the top 3 ones who will have it. And it's hard to do that, but something needs to convince the investor that you are the one that's going to be left with the chair. I'm sure you've heard that analogy before, but I think that's very important. Having kind of traveled and seen some of the conferences that are happening in the US, it seems like people are actually building something. And just in Russia, every other booth was an exchange licensed in Estonia with whatever uniqueness that they have. Every other person walking around was an OTC desk, licensed nowhere, And my comment after that was, who's making money in this whole blockchain and crypto space? So, I have a company that I'm at that's building, a POS and a card system on the Lightning Network. Are they going to make money? No. But the exchange is going to make money. So the only ones that are making money are exchanges. And there's a lot more of them outside of the US than are in the US. So the US is building infrastructure, I think, because there's funding from people like us and all of that, whereas the rest of the world is building this kind of money-making, questionable legality mechanisms. So I don't know. Let's draw some conclusions, see where we're going to be. Who's going to survive the race, right?
With that, I want to say thank you again to our 3 panelists. And thank you, you guys have been a great audience today. And so I want to make sure you have the opportunity to come meet the panelists and mingle. We have until 8 o'clock. So yeah, please take advantage.
Nixon curfew.
Thank you.